are your gainers in trade up until now?
Let me now bring on board Gautam Trivedi, Managing Director and Head of Equities with Religare Capital Markets. Gautam, morning. Thank you for joining us. Gautam, Indian markets are up about 10% plus from the May's low. But if I map market action for last 10 or 15 days, it is evident that markets are now struggling. So given the kind of global backdrop we are in, what are you advising your clients?
I think the fact is the market, as you said rightly, is year to date up in dollar terms as much as 8 to 9%. That makes it the best performing stock market in Asia outside of the Philippines. And if you look at the absolute dollar inflows into India, that's been $9.6 billion year to date of FI inflows, which accounts for almost 37% of all of the FI inflows into Asia, which is ex-Hong Kong, ex-China. They don't reveal numbers. So India's done extremely well vis-a-vis not just Asia, but also vis-a-vis the other three BRICS economies. It's been the best performing BRICS nation year to date as well. So I think given all of this outperformance and the fact that we've done so well, foreigners are now really waiting to see what Delhi ends up throwing in terms of economic reforms or any indication of trying to control the fiscal deficit. These are the two principal concerns that foreigners have. And I think if we don't see evidence of that coming through shortly, the market will start to correct.
Gautam, the government has indeed got a lot of flack for non-performance when it comes to reforms. Do you think in the near term the government will perhaps take steps to improve flows into equity markets as well, besides taking some key FDI-related decisions?
I think the government has, I believe the government has a golden opportunity to differentiate India from the rest of not just the BRICS economies, but in general from the emerging market economies, because China's been a huge underperformer this year. Brazil has been an underperformer, as has been Russia. So I think this is a great opportunity for India to bring in more, not just FI, but even FDI flows, if they can sort out GAAR, if they can sort out a whole bunch of economic reforms, which a lot of the FIs have been patiently waiting for the last 2 years.
If none of the following things you mentioned, if nothing happens in the next 3 months, what could happen to markets then?
I see a correction, frankly. This is in spite of the fact that we've seen $1 billion come in this month, a very good demand for the last 3 blocks that got done, Yes Bank, Axis and K in India. In spite of that, I think there will be a correction because I think the incremental foreign investor is getting exasperated with the lack of responsiveness from the Indian government. So I think the markets will start to correct, and I can see a potential at least 10% downside.
And given the political realities, do you think it's hard to imagine that we will get strong news flow from center?
I don't think anybody has a great answer to that. I think after the Time magazine cover, I'm sure the Prime Minister probably wants to do something about it and definitely change the image of India that not just the local press, but even the international press has now been talking about. So I really hope, for the sake of all of us, that the government does come out with a slew of reforms, which is long overdue.
The fact that the GAAR issue will now be addressed by a new committee, and we know that what these committees do you think somewhere that's disturbing for markets?
I don't think it's disturbing for markets as yet, because the fact that they've even set up a committee to look into the effects of GAAR and how it's impacting FI, FDI flows, it's definitely a positive step. Of course, we can't predict what the outcome will be, but do keep one interesting fact in mind. If you look at the net FI investment into India, a day before the budget, so from the 1st of January to the 15th of March, that was $8.8 billion of net FI inflows. If you look at from the 16th of March till today, that's been an incremental $750 million. So clearly, FI inflows have slowed down, and GAAR is probably one of the prime reasons that it's slowed down.
Gautam, what is your sense then, looking at the parameters or fundamentals that the market is working with? Do you expect the markets to remain range-bound in the near term?
I do, yes. I definitely do expect the markets to remain range-bound. I think the fact is, if you look at this year, foreigners have been grappling with a whole bunch of deadlines that were sort of imputed by the market. So you had the budget, didn't turn out to be anything meaningful, in fact more negative with the GAAR announcement. Then we had the UP elections, and that was looked upon as a deadline after which significant reforms would come. Didn't happen. And a few weeks ago, the then FM, should I say, Pranab Mukherjee, said on the Monday you will see a slew of important reforms. Nothing really happened. And now we've got the presidential elections this Thursday. So I think if nothing significant happens after the presidential elections, I think that will be when foreigners will start to throw in the towel. And I think the government needs to move really fast.
Gautam, what about a weak monsoon though? Do you think that remains the key downside risk to the markets, at least in the near term?
Well, yes and no. I think if you look at our food grains supply, we have 82 million tons of food grains in the various government coffers. I think that is a historic and record storage of food grains. So I don't think monsoon's failure or perceived failure, again, it's confusing as to whether it's really failed as yet or not, is that big a deal. I think the issues that really come to mind, which the foreigners and as well as domestic institutional investors who've obviously been pretty much absent from the market this year, would like to see the following. Number one, I would put down as the ability of the government to actually curtail or contain the fiscal deficit. Any steps in that direction will be looked upon very positively. Second would be the return of capex from the private sector. All of the recent India conferences held in India, when you talk to investors who've attended these conferences, they have not come back feeling confident about any significant incremental capex taking place by Indian companies. So that is clearly a dampener. And the third, of course, would be interest rates. I think you have to see interest rates trending down this year, and if that doesn't happen, I think that is a cause of concern.
Gautam, if I map India's performance versus regional performance, India has been a marked outperformer, like you said. So whatever could go wrong for Indian markets has gone wrong in last 6 months. We have a broken down currency, news from center has virtually died, earnings are under pressure and commodity prices are still high. But despite so much of bad negative news, Indian markets have not gone back to December lows. Why is that?
I think lack of alternatives, and that's really what it is. And this is in spite of the fact that the domestic investor, as I said, has been a net seller in the market. We run, as you know, Religare runs one of the biggest domestic retail brokers in the country. We have weekly to daily calls with our retail team. And even on the retail side, this is ex the mutual fund side. Retail side alone, we don't see incrementally that much money coming in or interest coming in from domestic retail investors. So I think we have been dependent on foreigners, and that dependence is going to continue to remain pretty strong until you see interest rates coming down.
Gautam, what about the central bank action? What do you expect the RBI to do come July 31st? Because if indeed there is a price cut, do you think that is going to instill the next 5% move on the markets?
I don't think so. First of all, we believe that the RBI is going to be hard-pressed to actually cut rates at the end of this month. So that is unlikely to happen. Having said that, we do hope that there will be our estimate rather is a 50 basis points rate cut in this fiscal. That's an additional 50 basis points. So that will happen at some point later in the year, not necessarily at the end of this month. But I think a weakening IIP number, and if that continues, will, I guess, put additional pressure on the RBI to cut rates sooner rather than later.
So for those who believe that there is enough value and deep value in some of the large cap PSU banks, do you think they will get it wrong?
No, I don't think they'll get it wrong. I think on the large cap PSU banks, we in particular have two top picks, State Bank of India and Axis Bank, so we like those. We also like some of the smaller banks like Yes Bank. But I think the concerns that people have with respect to the banking sector in general is the fact that incremental loan growth is coming from working capital versus project finance. And that goes back to what I said earlier about the fact that the private sector capex is basically significantly down, and hence obviously the project need to fund project finance is clearly not there. So I think that is a prime concern, and the fact is if the economy does continue to slow down, then will it continue to add to NPL? So these are obviously two of the major concerns. But having said that, we still continue to like both Axis Bank and State Bank of India.
Gautam, the street is divided on how investors should now approach defensive stocks. For those who believe that the world will be a dangerous place, they believe it's still time to hide in defensive. But for those who believe that things will change materially next 3 to 6 months, they are of the view that it's time to log out of defensives. So at Religare Capital, what is your view?
I would urge people to stay in the defensives. We still like some of the consumer names like Bata, for example. Of course, a lot of these stocks are trading at very high multiples, but we see no evidence of selling whatsoever. So we had our consumers analyst who was last week in Asia, met over 25 investors between Singapore and Hong Kong, and came back pretty confident that there is still no appetite to sell the consumer names. People will continue to stay in these names. The one other stock which I think has been fairly steady at the 700 to 720 levels is Reliance Industries. I believe, or we believe, should I say, a lot of the negativity around the E&P side with respect to KG-D6 is priced in. I think that's another stock which I would urge people to look at from a long-term view.
What is it that you like or dislike when it comes to the auto basket, Gautam?
I think the CV segment is will continue to have will continue to be weak. I think there is concern about the overall macro. We've spoken to a whole bunch of the CV players, private as well as the listed ones, and there is a clear slowdown on the demand side. And I think it's not so much the financing cost that, believe it or not, is not that big a deal. It's more to do with the absolute demand for freight. I think that's what's a concern. But having said that, the one stock we still like within the CV space and would urge people to look at lower levels is Ashok Leyland. I think it's got a great story going forward. Its joint venture with Nissan is working out very well. They have a product called the DOST, which is a competitor to Tata's Ace. And I think from a long-term perspective, at sub 25 levels, we would be buyers of Ashok Leyland.
So Gautam, if you have to construct a portfolio of 2 or 3 large cap stocks, 2 or 3 mid cap stocks, more like an absolute return portfolio, what would you like to buy in that portfolio?
Yeah. Yes, I would recommend people buying Ultratech Cement and or Ambuja. So we definitely like the cement space a lot. We like also the banks, so we urge people to look at Axis and State Bank of India. And if I can call this a large cap, I think the combined Mahindra Satyam, or should I say Tech Mahindra, is something we like as well. It's extremely cheap, 9 times forward earnings, and a significant discount to the 3 top IT companies. In the mid-cap space, we like the digitization plays. So we like Hathway. We also like Dish TV, but the stock clearly will see an equity issuance around the 80 levels, which the company has said. We don't like the IT space, but we like some of the mid-cap IT names like Mindtree, which we believe is very well positioned. Also Hexaware. With Hexaware in particular, I think there is a pretty strong M&A angle as well, which may or may not play out, but the stock clearly does reflect some of that. So I think both these are trading at 8.5 to 9 times and are cheap. So we like these. Within the mid caps, also we like some of the mid cap cement companies, Shree Cement and JK Lakshmi Cement. Both these are trading extremely cheap. JK Lakshmi Cement is at 4.5 times forward EV EBITDA. And the other interesting part about both these companies is they don't use coal, they use 100% pet coke. So that's a big positive for them.
Given me actually more than half a dozen ideas. So let's nail it down to one each. One mid cap, one large cap. High conviction idea, absolute return ideas.
Okay, you want to nail me down? Ultratech Cement in the large caps, and in the mid caps, I'd pick Hathway.
Hathway. Okay, what makes you bullish on Ultratech Cement? Because if I look at enterprise value, that's how you value a cement company. It is trading above its replacement cost.
I agree, but the fact is that we are very bullish on the cement sector as a whole. I would have otherwise probably prompted to say ACC or Ambuja among the large cap cement plays. The problem though is there is a persistent rumor in the market, and again it resurfaced over the weekend, that Holcim is likely to charge both these companies a royalty of 2%. With the exception of one of the wholesale companies in Indonesia, wholesale really hasn't done that, but I think that itself will continue to sort of spook investors. So we still prefer Ultratech. And was your other question on Hathway?
Yeah, Hathway also, I mean, yes, digitization is a big opportunity, but the implementation, the entire process could be a long process, and these stocks already have appreciated good 25 to 50% in the last 6 months.
Yeah. See, the thing is, in the case of Hathway, and oddly enough, the entire digitization effort by the government is one of the few examples of how the government has done a great job in pushing through reform in one segment, and for some reason hasn't been very successful in the others. But specifically on Hathway, the number of set-top box additions have jumped from 50,000 earlier in the year to now 250 to 300,000 a month. So there's a rapid increase in the digitization process, which clearly confirms that the entire effort to digitize the country, at least starting with the first 4 metros, is succeeding. FY14, I think, is going to be a much bigger year for Hathway because there are additionally more cities where Hathway is present and come under the digitization list. And hence, I believe that the future of Hathway is even stronger than just what we've seen so far. The stock could easily be double in the next 18 to 24 months.
Okay, Gautam, good to have you on the show. Appreciate you really taking the time out and joining us today on ET Now. Let's quickly walk you through what the market is up to. And Squad can be absolutely flat. 52.31 is where the index is. Individual stocks, of course, showing you moves, but you'd have to say the headline indices, both on the mid as well as the frontline end, are looking absolutely quiet. Ashwini, your thoughts on how we've kick-started trade?
Well, there's nothing much happening, although, some individual stocks may show some movement. So mainly it's trying to trade, breakouts on individuals. Welspun Corp is a sell with a stop about 115, target of 107. Jindal Steel is a sell with a stop about 427, target of 412. Reliance Capital is a sell with a stop about 362, target of 340. Praj Industries is a buy with a stop about 60, target of 68. And Tata Coffee is a buy with a stop about 950, target of 1020. And just right now, Sun Pharma has broken out. So that's something that we have personally bought. So that looks like completing a 6-7 day correction. And maybe if we are lucky, we'll get some upside, maybe 635, 640.
Ashwini, thank you for those trading ideas. Now, the good news here is that Indian markets are outperforming regional markets. The bad news here is that large cap stocks are looking slightly tired and toppy. But when we come back, we'll change gears and we'll connect with Parthasarathy Som, Chairman of the Expert Committee on GAAR, as to what is the task ahead for the committee.